Hi and welcome back to today's morning report. Chart appraisals on Tuesday the 10th of March with me, Rich Perry, market analyst at Handtech Markets. The euro now, and well, what can I say that's not really already been said about the euro? It looks incredibly weak and getting weaker. It seems to be that yesterday's move was just a dead cat bounce really, and we're accelerating away once again to the downside. Momentum indicators extremely bearish. And the only real thing I can say from the positive side for any Euro bulls out there, which I can't imagine there are too many, but the RSI is at 19 and got to 17 in January and September. Was it September? So, yes, September, there we go. 16, 16 and a half. So there is still further downside potential in this move, but, and I say but, you would argue that it's beginning to get a little bit overstretched to the downside, but still, I mean, the momentum is so negative on this Euro chart that, I mean, it could continue to go, and there's no real reason why it shouldn't. It's just incredibly weak, and breaking supports left, right, and centre. Downside projection targets being broken. The fib levels 107.92 didn't really last long, and that's now opened up 106.17, which is the next fib level, which is 61.8% of this bear market move that's sort of consolidated, and then you sort of measure it back down again. That's sort of measured up from 25.69 down to 10.98, measured from that 15.32. Ultimately, if you're going to talk 100%, so I'll just show you there, 100.52. So basically going back to parity if we break through that 61.8% fib. So very weak indeed on the euro. Now on the hourly chart, you get a gauge a bit more of maybe some resistance levels if you did get an intraday bounce. 108.20 was yesterday's low support, and interestingly enough, it's sort of not a million miles away from that reaction high that we saw early today before the sell-off really started to get going. So you'd say 108.20 is your initial resistance, and then obviously yesterday's reaction high at 109.06. But looking across the board, even the hourly momentum indicators are just extremely weak, and also the MACD lines have got further downside potential. So it does look pretty bearish, to say the least, on this euro chart, and any sort of rally you get is a chance to sell. I suppose you could think about moving averages maybe, but even then you don't really get back to that 55-hour moving average anymore. It seems to be accelerating away from that. So just anything really you get in terms of upside. I suppose ideally you'd be looking at probably 108.20. But again, that's sort of 60-70 ticks away from where we are now, 70 ticks or so away from where we are now. So there is still just it just looks ultra bearish pretty much across the board. But I suppose just almost aside really, is that when things get their most bearish, at which you start to get buyers coming in or support coming in, because the selling pressure just starts to abate. So it's interesting whether that's going to happen, but at the moment just the downside pressure on this euro is so great. It's 100 ticks off today again, that it's very difficult to see a bottom in this euro price at the moment. So yeah, further downside looks to be the case. Anyway, I wish you good luck in your trading on euro today, and I will speak to you again tomorrow. Oh, in a bit actually, for cable.